Hey, everybody. Tyler Rowe here with BitcoinTreasuries.net. Today, we're talking navigating exchange relationships. So, for people who might be starting a Bitcoin treasury company, thinking about allocating Bitcoin on their balance sheet, we've got the best minds in the space to talk today about this. We've got Will Reeves, who is the CEO and chairman of Fold, and Michael Geraci, who's a derivatives trader at SDM, that's Secured Digital Markets. Will, I'm going to throw it over to you first. Can you tell us what Fold does and how you kind of sit on both sides of this? You're running a platform that helps people buy Bitcoin. You're holding Bitcoin on your public company balance sheet. How do you think through exchanges and buying Bitcoin?
Yeah, it's an interesting opportunity and challenge for us. We are once, our core business helps people accumulate Bitcoin, whether that's buying spot, converting their paycheck, rounding up change, uh, DCAing, all matters of ways of accumulating Bitcoin, Bitcoin rewards. At the same time, the company has been accumulating Bitcoin ourselves for our own treasury and our own operations and we those are different users, different use cases that sometimes require different feature sets. And so, it hasn't always been the case that, a single provider can handle all of those different types of needs and use cases. And so, what we look to most is to solving great problems for our customers. And so that means partnering today with what we believe is the gold standard in Bitcoin custody, which is through a nationally chartered OCC trust charter with BitGo that gives them great legal and compliance protections at the same time of operating on a really sound infrastructure and architecture. And that allows us to deliver a great product for our customer base. As for our treasury, we've actually used it in a few different ways as in the history of our company. We've held Bitcoin in multi-sig, where we are holding the keys as the executive team. We have held it sometimes in a custodial arrangement, where we maybe are holding one of the keys in a multi-key setup. And today, where we have consolidated that into BitGo as well, and a lot of that is to do with the fact of they have the infrastructure to do that. They provide insurance, but for us, going through the public market process really narrowed down our options. The SEC and regulators, uh, I don't think are as advanced in understanding what it means to hold your own keys in a self-custodial way. They don't even necessarily understand multi-institution custody. And so for us, it really narrowed our options, but we were lucky to find a great partner in BitGo where we were actually able to deliver a great product for our customers and all of their needs as well as the business. But it's been an evolving landscape just as Bitcoin custody options have really evolved over the last decade.
Hmm. Yeah, I would say what were the biggest things that have changed since Fold went public when thinking about custody solutions?
Well, for us, we think the kind of absolute apex form of holding Bitcoin is when you hold the keys. And so for us, it was always a very important thing to um, have a setup that allowed Fold to hold the bulk of our treasury in a distributed key setup in a way that we were able to what we believed had the highest degrees of assurances for the safety of that treasury over the long term. Now, our business also runs on Bitcoin. We're paying people in Bitcoin. Some of our operations require Bitcoin to be, held in reserve or float. And in that case, we have relied on, and tried many of the custodial Bitcoin services, including our own, to manage that. But the really where the major change happened is going through the public process. You really get to see the lens of the SEC and other regulatory bodies and how they look at custody. And oftentimes for them, they ask, it's really a series of questions that are really designed for the traditional financial system where someone is always holding your treasury for you or on your behalf. And so the once they start going down the rabbit hole of, the ability to self custody, arguably one of the breakthroughs of Bitcoin, it doesn't necessarily fit into their framework as well. And so, it leads to questions of, well, where are the keys held? Okay, who holds the keys? Is this in a bedroom? Is this in a safe, a bank safe deposit box? Okay, what type of bank? And you kind of run down, all of the various risk profiles of that. And, it gets really complicated. And complication for the SEC and regulatory bodies like that is not something that is going to make anyone's life easier. And so we really had to educate them on, the diversity of our setup, but at the same time, ultimately find a great partner like we did that was able to kind of balance the idea of holding keys, but also using a custodian that they could understand so that we could get through the process. And so, we had to evolve our own custody setup uh, to get through the process. But already we have seen the kind of the understanding of these regulatory bodies start to evolve and start to expand and get smarter on this topic. And so that is exactly what we had hoped for. And a lot of that is just really what has happened over the last 6 to 12 months with a complete reversal of Bitcoin policy and regulation at the federal level has really spurred a lot of this education. And we've been happy to help educate them along the way.
Awesome. So, Michael, can you give us the minute version of secure digital markets? Who's your typical client and what are they looking for when they first reach out?
Sure. SCM is a crypto native institutional brokerage. We sit between clients and the market. We execute, we source liquidity, we help structure. We're not a retail platform nor a custodian. Our clients are hedge funds, family offices, high net worth individuals, protocols, and miners, and a few others. So our typical end-to-end trade process is handled from execution to the closing of position, along with white glove service of um, finding solutions for the client needs, creating bespoke solutions and derivatives. So really asking the right questions to the client in terms of their needs and coming up with a proper solution.
Now, we're talking to people who are thinking about starting a Bitcoin treasury, maybe a treasurer, a CFO. And when we say exchange relationship in this context of a treasury, what are we actually talking about? Because I think there's probably a lot of CFOs or treasurers out there who might just picture a Coinbase account.
Sure. So on the retail side, you have an account and you click buy and you own the coin or a derivative of the coin. On the treasury side, you have a counterparty relationship, a credit facility, settlement terms, reporting, and someone accountable on the other end of the phone. And Will just brought up some very good points about holding the keys and the structure. And really jiving with the SEC. So I think those are really powerful points there, and the differentiators between a typical retail exchange versus a Bitcoin treasury.
Yeah, Will. So your company has been adding to its Bitcoin treasury over time. What do companies get wrong when they're assuming that a retail grade setup is good enough, for a treasury program?
Well, I think there are various varying degrees of companies holding a treasury. There were times in Fold's history where, probably our setup looked a lot like what a retail customer's, trading account would look like. You buy some Bitcoin, you can withdraw it, you can hold it. Maybe you got some breaks and better economics along the way, but by and large, it looked, very similar. Now, um, and that setup works for many different types of small to medium businesses who are just kind of holding a Bitcoin treasury as part of their strategy. It's not all of it; it's a piece of it. But as you move up the ranks, and the ranks is not really anything but how many people are looking at you and auditing you. Um, the audit trail becomes incredibly important. You have to have the ability to have audit trails, controls on who's accessing, which users can access, history on any movements made in the account, all of that becomes incredibly important. And you not only have to have that, also want to have other layers where, someone cannot just from your own organization, unilaterally move funds. So you might have, different people signing into, parts of the key to then release funds. And then you may need a third party there that is doing a final verification. You might need to show up, have a video verification. And all of this is really, again, recognizing the reality of larger organizations have more people involved. There's more complexity. There's more risk in terms of knowing and controlling who has access to what and what powers they have. But also, all of that activity also needs to have a very clear audit trail and can be tracked. And those are the types of things that your typical retail account is just really not going to have at all. And beyond that, we very much, I think, deviate from a typical Bitcoin treasury company in that, we're an operating company that our revenues are in Bitcoin. Our customers have Bitcoin. We have payroll that can happen in Bitcoin. And, we look at our treasury as both where we store our long-term value, but also it's something that we need to move, or parts of it we need to move every day to satisfy operational obligations. And so to have both of that, the setup that is good and geared towards long-term holding is a very different setup than one geared towards fulfilling, operational needs and payments on a day-to-day basis. And finding a partner that is able to satisfy both needs is really important. And, it goes to show also, having multiple accounts also just increases complexity in and of itself. So yes, there is an argument to be made that it, diversifies where you're holding, but it also increases the amount of complexity around permissioning, access, and all of that across multiple. So I think that's where you really need to make some decisions and trade-offs on what's right for you. Of course, if you're just holding and intend to hold your Bitcoin for the next decade as a small mid-sized business, very much simpler than, one that needs to be audited and moved and is both used for long-term and daily operational needs.
Hmm. Yeah, really, really salient points. Could you walk us through, Michael, what a standard spot exchange relationship could look like for a company, and when that might be the wrong tool, and a company might need to look at maybe doing OTC transactions or navigating through a prime brokerage relationship?
Absolutely. So roughly about $250,000 in notional is where slippage on retail starts to become material. At 1 million plus, it becomes highly unambiguous. And that's really the threshold at $1 million where the OTC markets really offer depth and liquidity. At SDM, we work with five of the major dealers. We have ISDAs, and we also have exchange access. So we have deep pockets of liquidity across the digital asset ecosystem, and we leverage that to deliver best prices for our clients. So it's really paying attention to spreads and fees, and passing through best prices to our clients.
Cool. How much are we talking on slippage? Can you give me a concrete number? Like you said, at $1 million, it becomes a no-brainer. What's that look like for a treasurer who's looking to allocate, maybe for a $1 million purchase?
Sure. So on $1 million purchase of Bitcoin, you can expect to pay about 60 bips in a fee to have that order executed. And keep in mind that typically is in flux depending on the general liquidity of the market. But figure around 60 bips at the high end of the range, sometimes much, much better than that. It can be as low as 15 bips. So 15 to 60 bips, 60 bips being the max is a typical fee for Bitcoin.
Will, I'd talk to you about, as your company has added Bitcoin to its balance sheet, how does that prime brokerage relationship fit in? Um, what type of scale is relevant for a company, looking to access these deeper pockets of liquidity?
Well, it's interesting. The market's really, trying to figure out what the right offering is to serve these, treasuries. There's historically some have charged for kind of AUM fees on what you have there, and when you're holding a large Bitcoin treasury, and it's the idea of it is it's supposed to sit there for the long term, and these fees can really start to add up. And then you have others that say, hey, we're not gonna take on the AUM, but we're gonna trust that you're gonna do your trading or your Bitcoin buys through us, and we're gonna make it on the bips on the Bitcoin buys that you do. And so, I think the market is really trying to understand and undercut. It's getting far more competitive. For a while, if you look at who was holding the ETFs and most of the Bitcoin treasury company balances, it was Coinbase. And Coinbase, in many ways, was the only one blessed by the SEC. You kind of got through the process easier. If that was, and along our process, many times people just said, hey, you can make this a lot easier for yourself. You do that. Unfortunately, our business competes against Coinbase on many other fronts, and it really wasn't in our interest to park all of our treasury with them. And so it has been a good thing to see the industry diversify. If you're looking at all the ETFs today, you see many have diversified to BitGo, more recently to Fidelity, and there's just more that are coming to market that are going to be up to snuff by the SEC and other governing bodies. That is only going to diversify this. It's going to add more competition to the market. We're already seeing, we've been seeing it happening on the retail side for a very long time, of essentially the race to zero on fees, with Morgan Stanley coming out recently and pricing their trading at 50 basis points, which, you put that up against retail trading on Coinbase or any of the other Bitcoin exchanges. I mean, that is just almost the best deal in the market. And the same thing is happening to on the corporate side and the kind of more commercial buyers. There just needs to be more competition. It just happens slower because there's a lot more auditing and governing bodies that need to bless these setups. So for me, always competition is the best thing. It's not great for our industry to have such concentration at that level. Um, but ultimately now you really can have many different options available to you that will fit your type of business and what you're looking to do with your Bitcoin treasury.
Yeah, it'll be really interesting to see how that landscape changes. I think as at least Western governments have taken a bit of a more dovish approach to Bitcoin in the regulatory hand. So that'll be exciting to monitor. Michael, I'll come back to you. So if I'm with a private company and we're doing our first allocation, maybe $1 to $5 million, adding to our balance sheet, what should a CFO, a CEO who's calling think about before they pick up the phone with you? And I'm sure there's conversations about one-time purchases, ongoing purchases, and all that. But what should a CFO really have in order before they reach out?
I would default to the custody decision comes before execution, and that's the conversation to be had. Where's the Bitcoin going to live? And really don't get into the transaction before that's answered. Get your baking relationships aligned. Fiat needs to move cleanly. Some banks will flag or block wires to exchanges. The KYC AML onboarding for an institutional desk takes about 2 to 4 weeks. And so really just getting ahead that. So I think really it's the core regulatory issues and custody that should be addressed first before you get into the specific strategy of the treasury and what you expect from any type of yield or return.
Yeah, when I've talked with people, considering a Bitcoin treasury or expanding a treasury, some companies have been surprised in talking about, how long the KYC onboarding process can take place. Of course, there's a lot of regulatory hurdles there, navigating that relationship. What would you say to a operator who might have questions about that KYC, or might have a bank who might not be friendly to Bitcoin, Michael?
I would offer ways for them to just you want to have live customer service in this case,
Hmm.
to really go through those questions in detail. And each entity is going to be very specific and very different. Um, so sometimes fact finding in this space, and customer service, especially on the retail exchanges, is non-existent. So I think that's where the edge comes in for a company like Fold. And that's what I discussed before. That there's going to be someone on the end of the phone, and you're going to be able to talk to someone 24/7. So that's tremendous customer service. So I just defaulting back to your question that I think it's just a matter of the ability to communicate and connect with someone to go through what can be, a very detailed process.
Yeah. Will, I'll come over to you, and you've talked a little bit about the regulatory piece. You guys went public, and you're running a Bitcoin forward business. When you've talked with capital allocators or investors, have they expressed concerns or different questions that you might not have had, since being public, in managing the exchange relationship, in managing liquidity relationships?
Part of our kind of drive to go public in the first place was we believe there was a real lack of Bitcoin focused businesses that were connecting retail and businesses to Bitcoin in ways that um, didn't focus on the speculative element of Bitcoin and all the other long tail coins. It was really just about a more conservative approach to managing personal finance and business financials, with Bitcoin as part of it and dollars. And I still need to get paid. I still need to pay vendors. I need to buy things. We wanted to make that really easy. And there really wasn't a representative in public markets that did that. A lot of them represented the more speculative, kind of, maybe word you could use the word kind of casino approach to our space, which is fine. But the truth is that without the kind of public market stamp of approval, a lot of the traditional markets and traditional partners just were not accessible to us. They needed that public market halo.
Right.
And that is not only true of Fold and all the kind of doors and partnerships we've been able to open, but it's also true of these custodians. And a lot of the reason why many of these exchanges wanted to go public was because, again, Coinbase being the only one really out there doing this and the only one really public, all the business was going to them, leading to concentration. There wasn't great competition. So, you've now seen many have gone public. And this is why now you're starting to see an acceleration of this diversification because you just got that halo stamp of approval. And, when you're talking to a very conservative board or management team and they've finally gone through okay, I get it. Well, I think the right move is to allocate some of our treasury or some of our earnings into Bitcoin. The next question is from the CFO is, okay, where are we doing this? And oftentimes that list is, well, here's the wide, here's all the different places. And, people are always trying to de-risk and they'll use any signal they can to do so. And one of those signals that is big and that we have found to be important in that decision making is, well, are they public? Did the SEC who audited them? Let's just make sure that is, and then we have a short list that we go talk to. And that's just the nature of, an industry that is just kind of coming around to this, and they already feel like they may be doing something that is, not against the grain, but not necessarily status quo. You are kind of making a brave call to do that, and they want to mitigate all the other risks that could happen with it. And for better or not, one of those signals is having gone through the SEC process and getting into public markets and the quarterly reporting and auditing. All of that does tend to have an effect on their decision making.
Yeah, you've mentioned that you've been through all the waves of, managing your Bitcoin treasury and custodying that treasury will. Um, I guess what internal policies and approval structures have you learned that need to be in place for a company that's doing this? I'm sure you've had growing pains and learning opportunities along the way. I guess what tips do you have for someone who's considering a Bitcoin treasury, and what differences to those policies happen when you're thinking about going public through an S1 or an S4?
Well, one way to talk about this is, when we were starting out and building our treasury, we were also very early on our retail business to offer, Lightning, access to Lightning payments, also self-custodial Bitcoin wallets. And so it was very natural that we would kind of, eat our own dog food and use our own infrastructure. And we did that for a long time. And the wonderful thing about that is that you're self-custodying your own Bitcoin. And the difficult part is that no longer is it your CFO and maybe, your control environment accessing your treasury, and then you have your, tech team and CTO managing the more infrastructure. With Bitcoin, all of those are together. So your CTO also has access to, whoever's running your Lightning node has access to all the value there. That's just not a tenable situation for, anyone looking to, either hold a lot of value there or, go through the audit process to get through to public markets. And so the good thing is that there's many more options available to the market these days that are great, that represent really the spectrum of how you want to hold that Bitcoin that didn't exist in the past. And so, I'm a lot less worried about, people getting confused about what to do these days. There's increasingly more options that make that not into something where you kind of have to make it up or just choose whatever they're telling you to do. At least you have uh, some say in the matter now, and you can also have that say without sacrificing some of the core principles that you may believe in with Bitcoin: self custody, censorship resistant, all of the good things that come with this asset.
Cool stuff. And yeah, I think there's a lot of teams that are thinking through that process and thinking of ways that they can improve their internal controls to make that happen while balancing the properties, like you said, that do make Bitcoin so attractive. So, Michael, once a purchase executes, how does Bitcoin actually move into custody for someone who's utilizing secure digital markets? Are there failure points that they need to be aware of, or maybe you can talk about insurance there as well?
Sure. So on from the SDM perspective, we face all of our clients with an ISDA. So where the client holds custody of their assets, and we're facing them on a contractual basis with an ISDA. The risk is executed live. So it's up to SDM to go execute and hedge the risk according to how we see fit. Typically, we'll do everything as agent, and pass through the risk to the client. Um, in terms of execution, once execution is done, the risk is locked in, and then the client is um, live and responsible for the return of that risk. Um, in terms of operations and settlements, there's a lot of steps to be taken for settlement. Wallet address. The client needs a custody account set up before the trade settles. Typically, our trades are pre-funded, so it's about access to cash. SDMs can settle within a day, which is a huge edge in our business. We prefer to settle quickly. So it's just really aligning the details for the optimal trade and execution experience.
Are there any other, end-to-end things that SDM would handle or that a client needs to still own on their side?
Absolutely. SDM handles the reporting, and the risk reporting. Um, For derivatives, we'll give a daily margin statement. We'll let the client know where they are with their P&L, mark to market, daily fluctuations in their variable margin. So there's a typically on the options derivative side, there's a daily settlement in terms of, or if there's a big enough market move of a funds that are received or given from SDM and the client.
I'd like to come to you, Will, kind of on that same question. So you could talk a little bit more about the business that Fold operates and how does the Bitcoin get into custody for your clients?
Say, how does Bitcoin come into the Fold ecosystem? We execute opportunistic spot buys. We've historically, when we've taken in new funding, we've apportioned a large amount of it into Bitcoin as part of kind of long term capital strategy. We also are, as our customers are earning Bitcoin. So you think of every time someone swipes our new Bitcoin rewards credit card with Visa or our debit card, that is, they're essentially earning Bitcoin in real time. And so we're following all the buys, the trades that are happening, and then we're settling up multiple times during the day to reflect that activity that has gone through. And we're pulling that into our custody. Now, our customers themselves have trust accounts with BitGo that are completely unrelated to really direct relationship to BitGo. A account custodied in their name, bankruptcy remote, is insured in some cases, and they are able to buy Bitcoin directly there. So it makes no pit stop within Fold. So even if Fold was to go out of business, their custody and their trust account remains theirs and not a part of our business. And so really a lot of it is about what is the ideal outcome and setup for our customers. And as they're building a Bitcoin position, what is the ideal setup to navigate our operations, and what's the ideal setup to manage our long-term needs? Many providers maybe service one of those use cases, but when you get to a certain size, the amount of float and dollars that you need to have in each individual, custodian or trading account or OTC starts to kind of become very inefficient. And so there are a lot of reasons in economies of scale to consolidate so that, you're using your liquidity far more in your capital far more efficiently versus having them kind of stuffed into all these varying places. But you know, uh, Bitcoin comes into the business. It even comes in the business people paying with Bitcoin, and so it's coming directly from customer wallets. And so, if you think about all the ways Bitcoin can flow into a company, Fold probably has had to deal with that and currently supports that today.
Yeah. Interesting. So again, we've got prospective CFOs and treasurers watching this. I'll throw this question out to both of you, and Will, I'll start with you. What happens to those relationships that have been set up by a CFO or the part of the treasury team, and that CFO leaves, for other employment? What type of controls need to be in place? Is there a risk there of, managing those relationship, managing how custody works?
Well, luckily, all this has been much of it has been thought out, thought through. Is that for every controls exist beyond the people that are there today. There's also continuity controls and continuity plans about if you're a signer, who's the next in line to come in, if someone leaves, how you have to have all of that decided up front as well, and that has to be very clear and understood by your auditors to avoid that same thing. A disgruntled CFO leaving who holds one of the primary keys or permissions, and they don't really want to help you out anymore, can cause a lot of problems, which is an untenable situation to be in for any company, but also particularly a public one. And so you do have to have very robust continuity plans. Now, does it change the relationship with the actual vendor or custodian you're working with? Not particularly, unless you have a CFO who's coming in who thinks that they can find new efficiencies. Maybe they can shave off a few bips, or they have relationships from a previous um, experience where they can have better AUM fees, or some other structure, or maybe just a different strategy. Often what we're seeing today, this is not something that Fold does, but we know is pretty prevalent in the Bitcoin treasury space, is that many are now deploying their treasuries into what they call kind of productive capital. So options strategies, and all types of other, they deploy it into lending contracts to essentially earn yield on that. And so now you may have CFO comes in and says, hey, I have a path that we're going to monetize our treasury, and not every custodian offers that service, and that could be large enough of an issue for them to just move custodians outright.
Yeah, same question for you, Michael. If I'm a board member, a trustee, or a decision maker for a family office, say, what happens to that relationship that you've built with, maybe a CFO or portfolio manager? How do you make the relationship seamless for the end user, for the institution, for the people that you're working with?
Sure. I would say the best practice here would be institutional accounts, not individual logins. Like we'll hit on multi-sig custody, written policies shared in that are live in shared documents, not in someone's head. So you don't want to over leverage a key employee in terms of access or knowledge and methodology. You want to really mitigate those risks. Using a custodian like BitGo that Fold does, that's a fantastic solution for this. It's a federal regulated national bank custody. So it's the right model fit for customer assets, and it really mitigates a lot of the risks on the basis of this question. Um, and more to Will's point, it's like that's kind of the general direction the whole ecosystem has gone to. And that's going to really spearhead the confidence in digital asset investors.
Michael, if I'm a CFO sitting here, we think our team is 3 months out from maybe making allocation. Other than getting the banking in order and the KYC, AML, what's one thing that I should be doing right now?
I'd be landscaping the digital asset space for the right opportunity. Do a bottoms up kind of analysis and really have an understanding of what protocols are going to fit into the space and have some real utility. Case in point, Hype, and look at Hype, what they've done in DeFi and how that platform has really taken off. They've really spearheaded a wonderful access to an exchange, now bringing in prediction markets and perps. So they've combined that with a great tech stack and UI UX. So in terms of making an allocation, which would probably fall more in the hands of the CIO if there is one, then it's really about landscaping the opportunities, the dislocations, looking at levels of volatility in terms of if you want to get on the derivative side, what makes sense for you. The vol space is been very contracted since the beginning of the year. So Bitcoin, ETH, and Solana vol are trading very cheap now. Probably for Bitcoin, it's probably in the 10th percentile, which historically is very low.
Cool stuff. Now, same for you, Will. Say I'm 90 days out from making my first treasury purchase. What are tips that you've learned throughout Fold's journey? And, how should I evaluate, making a one-time purchase versus an ongoing program?
I think there's some great examples recently in the market for people who did one-time purchases, wish they hadn't, and had more dry powder to kind of DCA in there. You can go back and see some incredible sound bites from executives from treasury companies that smash bought the top, and we saw a 50% drawdown come through over the preceding next six months or so. So I think there's no doubt that you outperform when you buy low and you ride it up high versus DCAing over a long period of time into the market. But that's not really an option for everybody. And so sometimes you have your mandates are just very different and you do need to take positions. Um, and that oftentimes can soften out your 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 cost basis, if you're doing it slow and steady. And so I think it's a deeply personal decision to be made that needs to reflect an alignment with the board, the management team, uh, or else it's going to break apart. If you have a very split idea of this, or just one person is kind of pushing it to this, and like it's going to set you up for failure, and you're going to see that position get liquidated because you didn't bring everyone in on the thing. The most important thing is to have alignment so that when Bitcoin's volatility just shows itself, that nobody's second guessing anyone else or can say, "Hey, that wasn't my decision, that was yours." Have to have full alignment, or the inevitable thing is going to happen, which is true for millions of retail customers, is you get shaken out, you sell at the wrong time, and that's when you're not only destroying your own capital but that of others. It becomes really problematic. And so I think Michael first started off the conversation. Yes, what's the first step? And really, the first step is the education, gaining the confidence, and alignment. After that, you can think about custody and keys and permissions and all that. But without that first alignment foundation, you shouldn't move on to the next step.
You heard it here, guys. Custody is a building block for this strategy. Both of you guys, where should viewers go to learn more and get started with each of your organizations and learn more about what you guys are doing?
I'm pretty active on X. You can find me at Will Reeves, and would love to continue the discussion there. You can find Fold on the app stores. You can find it online, foldapp.com. Test out the product. Again, we have just announced and dropped our Bitcoin Rewards credit card, which we're very excited about, and would love to hear the feedback.
You can go to stm.co, go to our website. You can see the team, see the suite of our services across spot lending and derivatives, get an idea of the depth of our liquidity. You can also please reach out to me directly on LinkedIn under my name. Michael Geraci is seen on screen. Always happy to engage and converse and ideas, the volatility, analytics, and anything digital assets.
Great stuff. Thank you guys for joining us today. This has been High Signal. For Will Reeves and Mike Geraci, I'm Tyler Rowe with BitcoinTreasuries.net.